All right. Well, I was going to try to make this short tonight so we could all get back to our eggnog. So we could see today that Boeing was pretty much the main factor for the positive trading in the Dow. But the other indexes, so the Dow, after selling off on Friday, came right back again. And the NASDAQ, as you can see, has just been a steady. So there isn't any change of investor sentiment. We're in the overbought area, and it's not decisive trading. It's just slow, steady trading, which is more indicative of everybody just making calculated decisions of buying and selling versus enthusiasm or rampant enthusiasm coming into the market. S&P 500, same thing, and the Dow transports. Make this a little bit smaller. The Dow transports holding up well. Looks like it's coming out of kind of a consolidation stage on a Morningstar signal. So that still implies there's not a whole heck of a lot of bearish sentiment in this market. So what we want to do tonight is just kind of do not a review, but just kind of a understanding of what the advantages are for us with candlestick analysis. And so part of all that is just kind of the indicators that we can apply to the signals, the T-line being the most relevant, and then the other moving averages telling us what's going on at those levels. Trying to figure out where to start. I guess it pretty much is on the basis of just looking at the patterns that we recognize and knowing what the results should be. Oops, meaning your fry pan bottom. And I'm going through this because during this time of year, not enabled for, oh, maybe it's because I did it wrong. Now, X. If we recognize the signals, like the kicker signal and the pattern, it's just going to put us in situations where the probabilities of not only being in the right direction, but being in situations where the magnitude of the move is going to be all that much greater. So, hold on, I'm still trying to get my... So, this is why we want to recognize what a strong signal or pattern is. For example, Mesa, we can see the pattern setting up. There's your J-hook pattern. So if you start doing your trading based upon what we know as being the high probability setups, it makes it very simple to say to ourselves, all right, if we can see this fry pan bottom setting up and it opens positive tomorrow, what's it telling us? It's pretty much telling us they're confirming the pattern that we recognize. Or if we recognize a T-line crunch, it gives us that a little bit further advantage of knowing that we want to get in early if this opened positive today, based upon the T-line pushing the trend right up through the resistance level that everybody else is watching. GLA or if we can see something that looks like a scoop pattern setting up. So the reason that I've kind of pushed hard on people learning 3 or 4 patterns and become very expert at them is now you're starting to take your emotions out of your trading, and you're taking your emotions out of trying to analyze everything that's out there on the markets, meaning the tweets or the news items, raising interest rates, lowering interest rates, all the things that everybody asks, well, what's this going to do to the market, or what's that going to do to the market? You start eliminating that, because if you're trading 3, 4, 5 patterns or signals that you specialize in, now you can calculate what those patterns should be doing and what the news or tweets or whatever else might be affecting the market on any given day should have as a result, or what it might act as a result for that signal or pattern. So essentially what we're doing is we're kind of moving away from trying to anticipate or calculate what something might do to our price trend, and more concentrating on what should the price trend be doing based upon the patterns that we know. This is what kind of gives us the advantage that if we are confident that prices move based upon investor sentiment, then we know what type of strategies or what type of positioning we could put on in any position. As we can see in Tesla, the fry pan bottom. And if you become an expert or specialize in the fry pan bottom, you can start looking at what type of signals did we have at the place that we would expect a breakout. Well, we can see also there was a doji sandwich. Now we're getting that added confidence. So I'm kind of reviewing all of this because you don't have to be scattered all across the board as far as learning every single thing or pattern. Now, if you understand the doji sandwich, if you understand the doji or the morning star signal, if you apply the 12 major signals to your patterns, you should know exactly what you should expect at breakout levels. If you know what your strongest signals are, you can be ready to trade with a higher probability trade setup. Look at what happened to Boeing today. Gapped up, was up 9.5 points. But what do we look at? The fact that it did a doji after gapping up above the previous day's open. So we're already prepared to say, all right, if this opens positive tomorrow, what do we got going on? A bullish flutter ticker. So with it being up 9.5 points today, if it opens positive tomorrow, I guess the rhetorical question is, aren't there going to be some people out there John, that was always my feeling, but that was my feeling before candlesticks came along. Because I was usually buying at the time that everybody else should be buying, or everybody else was buying, which was the wrong time to be buying. I was usually the buyer up here at the top. You could never understand when I started buying, it'd go the opposite direction. And I was always the one selling down here and saying, this news is terrible, get me out. So this was my major advantage when I started using candlestick analysis, was because graphically I could see where I was usually making my decisions, which were the exact wrong decisions. So it didn't take very much to say, if this is where I'm usually buying or selling, and I'm usually wrong, then let's start looking to see what those buy signals are telling us. And when I started doing that, it took me a little while to stop, well, at least I stopped losing money. And then as I started doing other analysis of the different signals and patterns, like the best friend signal with a doji gap up, that was telling me, all right, that's a strong pattern to kind of recognize. PRTA, there was a doji gap up. What'd that tell us? There was probably going to be more upside. So the biggest factor that dramatically improved my my trading was having confidence in the signals and patterns that the Japanese rice traders were telling us worked and applying them. Now that was only part of the battle. I don't want to say half the battle. That was 3/4 of the battle. The other quarter of the battle was learning when the signal or pattern that you recognize as being a high profit trade wasn't working, to get right back out of it and go on to another one. Now that started doing two mental disciplines for me. First, it told me look to see what the chart is telling you. And then second, when the chart was telling me it wasn't working, it got cut through that emotional stigma of, oh, I hate to sell because I'm losing on this trade. What it did tell me, though, or what I eventually learned was, if you get out of a trade that's not working, that gives you much faster response time to get into another trade that is working. And that was kind of the ultimate cutting your losses short and letting your profits run, that we're never trained of how to cut your losses short. Anyways, I'm getting way off topic here. So we're looking for the patterns, or I'm looking for the patterns. I'm looking for that breakout, or a J-hook pattern breakout. There's our little J-hook. So I can pretty much calculate if this is wave 1, I've got a pretty good idea where wave 3 is going to. Probably up here. And how's it getting there? Kind of a morning star followed by a doji sandwich or McMuffin. So when I see those setups, I've got a lot more clarity as to which direction a price is moving and what the magnitude of that move might be. So what can I calculate from here? Well, if that's my breakout point, and this is wave 1, wave 3 should be the same magnitude, which will look like to be about 13 points. That tells me, all right, I'm heading for, say, the $45 to $50 range. Now, is that, yes, always the question is it going to get there? No, but at least I've got the calculation that that's a good probability. But the most important factor is, when do I sell? When I see that sell signal. So the reason we're kind of going through this type of session is, like myself, if I'm moving along and I'm not doing well, or it's not because my analysis has, or the charts have changed, because they're not going to change for the next 400 years. It's me analyzing what I should be doing when, and adding all the factors together. For example, if I'm looking at this on the markets, I'm probably not going to be looking at the short positions. I'm still more apt to go to the long positions. So that's, I mean, that seems so simple as far as logic. But you'd be surprised, you probably even see it in the chat rooms, where when the market is heading up and somebody says, should we be shorting XYZ? And XYZ isn't a real strong sell signal, and is kind of hoping that you're analyzing something that might be moving in the direction, but you're hoping because you're going against the probabilities. The probabilities tell us there's buying going on in the market. Let's find the patterns that are breaking to the upside. If the market was trading lower, we're looking now more for the patterns that are heading down. Now, that is more simplified by the fact that we've got a very good visual analysis of what the market overall trend is doing based upon the simple analysis of the candlestick charts. So if we can analyze which way the market's going, and then analyze which sectors might be acting the best, and then analyzing which stocks in that sector are acting the best, we're starting to put all the stars in alignment. Trade desk. I'm only bringing this one up because people have been asking about it. But now it's gotten to the point where it becomes a much more greater probability of a trade if it opens positive. What's it telling us? The resistance level is not acting as resistance. Now we're wave 1, wave 2, into wave 3. Oh, what are we? NVIDIA. Just very simple analysis. When it was breaking out, now we can put a very simple trade trend indicator to work. As long as it stays above the T line, we can stay long. As long as it stays above the 3T line, showing that there's more strength. Now, remember what the correlation is between the T line and the 3T line. The further away you start moving from the T line, the more effective the 3T line will be able to tell you when to get in and out of a trade. So this is not rocket science. Netflix, wave 1, wave 2, what can we visually calculate? Wave 3 and wave 1 look pretty much the same. We're in the overbought area. We did a hanging man followed by a bearish engulfing signal. What should we be thinking at this point? We're starting to get some selling. And what do we know as far as some of our simple trend analysis rules? If they go through a resistance level, they'll come back and see if it's going to act as support. So if I was long Netflix, whether the stock or the calls or option spreads, and it opened lower tomorrow, I'm probably taking profits because I'll expect it to come back here, and maybe by that time the T-line's correlated. But that's right there is telling me this is where some of the sellers are stepping in. Get ready to take some profits. Amazon, we have the trend analysis where we can see where the top of the trend is, and we can pretty much draw a parallel line. Make this smaller because I think it would even trend. So if you can see the top and the bottom are pretty much parallel, everybody and their brother who trades, the ones that trade trends, can see the same thing. We just happen to have an advantage to see what type of buying or what type of selling is occurring. And when it comes up, if we're long, we're looking for this target. If it gets to this target, what do we do then? We watch to see what type of signals occur, whether they're going to go through or they're backing off. If they're backing off, where's your next likely target? At least back to the 50, and then possibly back to the bottom of the trend. This is the reason I point all this out is because when I didn't have candlesticks, I was even a stockbroker with Kidder Peabody, Cowan and Company, and Oppenheimer for 8 years, and I just had no concept or no method to figure out who was. I mean, there wasn't an analyst on Wall Street that you could follow that knew any more about what made prices go up or down than anybody else. Once candlesticks came along, at least now I had a platform for telling me what my probabilities are. So we I think I do this every year and I forget about it during the year. I know there's people out there, because they've contacted me, and they just aren't making any money. They don't know what they're doing wrong. They can see the chart patterns, but they're just doing something wrong. And that something wrong could be as easy as getting into trades too late, or not pulling the trigger right at the appropriate times, getting out of trades too early, putting other parameters on that if I make 10%, I'm closing out the position. Things that have always been detrimental to profitability for most investors. What we want to do is analyze what makes for a good breakout, what makes for a consistent uptrend, and what is our best time factors, depending on each one of our own, our own risk-reward factors. Some people like to day trade or be in and out in 2 or 3 days. Some people, like myself, I'd rather put on a position and hold it until I see that final sell signal. Sometimes that's 2 days, sometimes that's 3 weeks. On average, it's somewhere between 2 and 10 trading days. Did I do this one? A J-hook pattern. So anytime I look at a chart, right now what I see is a J-hook pattern. But where I got my education, or I solidified my education, was I look back and say, all right, what started this uptrend? Well, there's my best friend. And look where it happened, right off of here. So even though I might not have caught this, at least I know to catch this, because this move and this move should be approximately the same. I don't have to catch every trade. I get a lot of people constantly asking, should we be buying Western Digital here? And unfortunately, not unfortunately, the logical answer to that is, where is this moved? This is where most people want to buy because everything looks great. But what do we see when we're analyzing this chart? Well, we're up in the overbought area. We've already moved up a good percentage. So what's our first thing that we should be teaching ourselves looking back at this chart? Where was the place to be buying? Well, we could see kind of a double bottom. We could see a breakout here. Or we could see a doji right on the 50 opening positive. We could be buying here. What's the advantage of buying here? Absolutely none. So the reason a lot of people ask, should I be buying here, is because they're missing this good move. And everybody hates to miss out or be the odd man out that didn't get into this trade. My education or my discipline came from the fact that, man, I wish I was in this. And so I'm not going to get in it because I missed it. Where should I have been buying it? That means I can go back and start looking at charts that tell me, all right, that type of setup might be much better buying it at the breakout level. I forget what this one looks like. Buying it at the breakout level where my probabilities are much greater. And so I wanted to make a point on that last one. What was it? Oh, Western Digital. When I see this type of thing now, in the old days before candlesticks came along, I would say, oh man, this is really moving good. I don't have anything better to get into, so I'm going to get into it here. And then what would usually happen? I'm still holding it as it's going in this direction. The nice thing about our scanning techniques with candlesticks is every single day we're going to find things look like this. There's going to be tons of trades out there that you can be buying based upon the time to be buying instead of trying to be chasing something. There's a difference between buying at the appropriate time and chasing. Up here with nothing to go after other than it's gone up and it still seems to be going up, I would rather trade something else where I know the probabilities are much greater in my favor. iRobot. What is the upside potential? Kind of fry pan bottom. There's a gap to fill right in here. And fry pan bottom coming up through the 50. And again, notice what our analysis was right here. That if you're buying down here, where was your first target? The 50. What happened at the 50? These are just kind of simple, fast analysis results. Just seeing that they couldn't close below the T-line and they were still crunching it up through this level. That told me to hold or be ready to buy as soon as it came through the 50. Where do you think most people, I say most people, one trading technique or analytical method is? People watching to see if they can get it, see if it goes up through the 50. If it gets up through the 50, that's when they start buying. We're ready for it well before that time. I mean, so when I look at things like this, let me make this one smaller. I put 2 plus 2 together. If that's a resistance level, and I see a J-hook pattern setting up, what's that J-hook pattern kind of imply to me? That this wave right here, or even this wave right here, if it breaks through, tells us it's going to go up a lot further. It's breaking through the resistance level. So that's just because I know what the results of this should be, and I know what the results of this should be. I know what the result of this little kind of doji sandwich setup should be right here at the resistance level. That puts me in positions where a high probability or a high percentage of the time, I'm already in the right direction just because I could see the pattern of the signal that was telling me I should be in that trade. Remember what we looked at over here on NTLA? No. NLTX. Look at the kicker signal. Look at your percent move. Moving from about the $5 range to the $12.72 range. This is what we're aiming for, is finding the ones, not because of knowing that there's something fundamental changing in that company, because we don't have the time or the research, money, staff, or anything to know what's going on with this company. But that right there tells us something's going on in this stock chart. Which means, darn, what did I just, when you see something like this, the kicker signal, that should imply, or at least tell us right away, I better do a sound check. Everybody hear me all right? Okay, good. A lot of times I'm sitting out here talking to myself. So this is what says, all right, let's go after this one. This is why if I pick out 4 different trade setups that I want to become very adept at, the kicker signal is going to be one of them. So the reason I'm pointing this out again is that you just specialize in a few. So once you learn those inside and out, now you add another one and then another one. But I go based upon one factor at this point. But every time I put on a trade, I know the probabilities are pretty strong I'm going to be in the right direction. And the other side of that coin is I know when that trade isn't working to come right out of it fairly quickly. So looking at Twitter, what's our analysis? Well, basing in here, then a fry pan bottom. Now it's come back up through the 50, coming out of a fry pan bottom. What's that imply? That we're still heading higher. And what was the instigation here? Knowing that it was coming up through the 50, because for the last 3 months, 2 months anyways, everybody's watching to see whether Twitter can get back up through the 50-day moving average. When it did, they were all ready to buy it. So NVIDIA, the breakout. Whiting, also a little breakout. Look at your little bobble, kind of a fry pan bottom. Where's your next likely target? Somewhere up in that range. Now, will it get there? If it did a big bearish engulfing signal tomorrow, I might close it out and move on to something better. But I'd rather close out, or I'd rather get into trades where I know the probabilities are extremely strong that they're moving in the right direction, with the idea that not every single one of them is going to work. And when we see that it's not working, you close out the position. Cena broke out nicely. Now it looks a little soggy. If this opens lower tomorrow, play close it out, knowing that it's probably just coming back down to test the T-line, but we can always get back in once it confirms that it's not going to trade below the T-line. Why did I close it out? Because it looks like the probabilities are telling us it's time to come out, that this may not be a breakout in this direction. At best, it might be a breakout or a steady uptrend in this direction. MGNX, same scenario. Now, how long do you hold on to a fry pan bottom? Very simple, as long as it stays above the T-line. However, I'm looking at the after hours, and it looks like they're bidding right here, and they're asking down here. So that kind of warns me that I better watch this position on the open tomorrow to see if there's something drastic, and I don't see anything that would tell me that there's yet any change of investor sentiment. There's the fry pan bottom when we recommended EXAS. Where was the best place to be buying this one? Right in here. Look at your bobble, breakout, fry pan bottom confirmation when it came through the 50. Where do you suspect your next target was going to be? Up here. So I have no idea what this company does. I don't have to know what this company does. A lot of people say, well, don't you want to know what the fundamentals are of a company? I don't have time to look up the fundamentals of a company and then wait for everybody else to plan on buying or selling it. I would rather have that next step immediately, knowing that everybody else has probably analyzed the fundamentals. Oh, they make Candlestick? Oh, I might have a box of that right here. Everybody else has already done the fundamental research. We're just seeing what the results of their research will be. And it doesn't matter what price stock you're trading. Candlestick patterns work just as well on a $3 stock as a $30 stock or a $300 stock. Now, I'm going to regress here. One thing that I have discovered about investing is it's like anything. MGNX oversold is something that you watch tomorrow. It was trading lower after hours, which doesn't mean anything. Very simple rule. You stay long as you don't see a sell signal and a close below the T line. So you just have to watch to see what they do with it tomorrow. I don't see any reason for the selling. And remember, after hours buying or bids and asks don't really mean a whole heck of a lot. They could be somebody's good till canceled that's been sitting there for 2 months and won't mean anything. The only time that the bid and ask really mean a whole lot is about 5-7 minutes before the open. That's where everybody's starting to put in their orders. And you will often see after hours somebody big comes out with an announcement and the stock goes up and then it goes down and then goes back up. It doesn't mean anything because it's moving around on, if this trades 6 million shares a day, it might be 10,000 shares up and down total moving it around after hours. All right, so here's what everybody needs to do. No, they don't need to do. This is what I would suggest that they do. For the next 2 weeks, till after the 1st, obviously it's going to be quiet holiday trading. So it's not going to be a whole heck of a lot of activity. Now, if we're lucky, we'll see the bullish trend continue right into the first of the year. But I usually use this time of year to go back. I know you're all writing your journal and you're writing in it every day. And I go back, even though I review it at the end of each week, I start going back and reviewing everything I've done. And I'll take an hour just reading back through. And if I start seeing things over and over like, oops, I should have waited for it to confirm, or I should have had a stop in at this level. If I see those type of comments over and over, then I know I've got to kind of concentrate on perfecting that type of or that aspect of my trading. So if I'm seeing that I have written quite a few times up, I should have waited for it to confirm a little bit more. I might be thinking, all right, I'm anticipating too much. I need to wait for more confirmation. Or if I'm saying, man, I should have bought earlier, because as soon as I bought, even though it continued higher, eventually it backed off and then started higher. I'm thinking, all right, I'm getting a little bit late to the party. I've got to start analyzing which charts look good and going after them as they're initially confirming. So that's a long dissertation to say that probably over the next couple of weeks, we will be doing different specific training so that at least you can start soaking it in a little bit more and getting ready for the coming out into the new year. Now, one of the things that we're going to be doing is I talked with one of our option traders yesterday that I thought was doing very well, and they were disappointed in what they were doing, not because of their analysis, just they were doing something and they weren't making money. So when I suggested maybe doing more spreads, they said, "Oh, I didn't think of that. They didn't know how it worked." And here I'm thinking, all right, they pretty well know what they're doing because they seem to be in the right trades at the right time. But what we got to realize is just because a chart is moving in the right direction, if you get in late, if you're buying calls that are too expensive, not only is the analysis important to see which direction a price is moving, but then taking advantage of how to maximize your profitability, reducing your risk with all methods of trading. So with that, probably within the next few nights, we would do a spreads training. Everybody, what I've gotten feedback is, well, that seems sophisticated, and it actually isn't. It's probably very simple. It's probably even a more simple calculation than just buying calls or puts outright. So, all right, good, Ed. So, and I've done this before. I find out that people are having problems and they haven't mentioned it because they're embarrassed or they don't want to waste everybody else's time. I'm going to start I'm going to start a system, or at least pushing people, that if you're having problems, don't be afraid to private message me, email me, because if you're having problems, more than likely everybody else is having problems, or other people are having problems. So don't think that if you have a glitch in your trading, that you're the only one that wants to hear about how to resolve that. So let's see. Why do I want to trade the stocks? Two reasons. One, I want to be able to get in and out fairly easily without having to wait around. And that's still a function of the size of account you have. If I'm buying $50,000 per position, I might not be trading stocks that are only trading 200 or 300,000 shares a day. I might be more oriented toward stocks that are trading 500 or more, 500,000 or more. If I'm trading $10,000 a position, yeah, maybe a $5 stock at 200,000 shares a day isn't going to be hard to get in and out. What I don't want to be doing is, if I'm ready to sell a position because it doesn't look good, I don't want to have a stock where it has volume so low that I've got to wait around and hope that my selling doesn't knock it down another 20, 30, 40, 50 cents just to get out of that trade. But the second factor is I want to have a chart that I can see what the candlestick formations are, and the lower the volume, the less or longer time it takes for that formation to kind of present itself. I want to be able to see something that with enough volume that it's a fairly fluid formations of the signals and patterns. Spreads, David, when we do it, it's very easy. And it's not only easy as far as the calculation of whether you want to do it or not, but most brokerage firms now, you just click on vertical and they'll show you the spread, what the price of the spread will be. So we'll go into that. Soybeans backed off today. Whoops, I say it backed off. Soybeans backed off from the high. Now it's trading a little bit lower, but you can see the pattern setting up for soybeans. So I would be a buyer of soybeans tomorrow on positive trading because you got a J-hook pattern setting up. I went after, I'm embarrassed to say this, I went after live cattle because I could see the pattern setting up, or the trade setting up, where it was trading lower after coming up to the T-line, and I was short. And what is the thing that you should always do, just for your own safety, is have a safety stop. So I was short down here, and I knew to put my stop right here, which I thought I did. But Andy called and said, we need to get out of here quickly. And so when I came back this afternoon, I said, well, thank goodness I put a stop there. And I looked and I saw him still in the position. I'd forgotten to put the stop there. So this is where you do what I say, not as I do. Because I knew I was going to be out for a while. I sat here and I got ready to put the stop in and I got distracted. So I always put a stop in. Bob, we did do the scanning session, and we can do that again. That's kind of one of those jam sessions where everybody kind of contributes. My email address is steve@candlestickforum.com. Whoops, we're still on the, I would, Joel, this is again using our function of the T-line. As you say, it didn't close below the T-line, but it did a doji. Didn't quite close, getting pretty close to the halfway point. So what's our parameter tomorrow? I would probably want to see it open positive and trade positive. Now, I've got a couple of different criteria there. We don't want to see it close below the T-line. So if it opened positive and traded positive, I'd still have a safety stop here at the T-line, because logic says if this is kind of a sell signal in the overbought condition and they open and trade positive, we definitely don't want to see them come back down through this level. If they do, that's confirming this signal. Okay, so, whoops, I didn't scroll down. Bill, yes, the book deal should be in effect. If not, email Abraham at candlestickforum.com and tell him you were trying to get the book deal and it didn't go through. And to go ahead and send you or do the book deal. I don't know yet, Bill. At this point, we don't have anything scheduled for the next couple weeks, so that leaves a lot of nights open. We will, if we do a scanning session, if we do a spread section, if we do an entry and exit strategy session, everybody will know about it from the room here, and we'll send a thing out to members. We already did it. Yes, we already did the scanning session, but we'll do it again. Unfortunately, Thinkorswim has good stuff. It's just cumbersome. We're trying to figure out how to make it less cumbersome. Okay, that's about all I got for tonight. Sorry we got started late. If we want to do some charts, just everybody do one at a time. So Jim, go ahead and do the double line. Just do one chart at a time, or each person do one. All right, and then 4.2 seconds, do the next double line. All right. Oh, this is what I wanted to follow up on. That's a good-looking chart. There you can see what's happening. Now, I'm going to regress here a little bit, Tim. This is a good chart because there's activity going on. You can see the pattern. You can see right here there wasn't very much for a long time. But this told us, even though it wasn't a buy until over here, that there was a new, perception of that stock. So that allows it to become much more active to trade instead of just sitting doing something dull. Tesla, Diana, I would just stay long on this one. Now, you are moving a little bit away from the T-line, so I would constantly have if this opens positive tomorrow, I'd put a safety stop at today's open. If it moves up nicely, then I'll move up later in the day and put a safety stop at tomorrow's open. Bill, I guess this is where you rhetorically ask yourself, which direction is this stock going? And if the answer is absolutely nowhere, I wouldn't be trading this one. There's just no direction to it. The till, you can see what happened today. Did a doji. So what do we know about the doji? It's going to move in the direction how they open after a doji. I probably wouldn't want to see it trade back below the close of the previous day, which was, what is today? Monday? Friday. Because if it comes down through there, that means it's backing and filling some. Now, if it does that, we still have to kind of assume that it's going to trade higher. I might go to my 10-minute chart, close it out, and then if I see the 10-minute chart bounce and start back up, you can always buy it back. Ruker. So this is where your 2 plus 2 comes into play. Look where you closed as a doji right here at the breakout level. You come up off the 34, a doji sandwich. Makes it very simple. If this opens positive tomorrow, what do you got going on? Your doji sandwich breakout. GTT, nothing. Wouldn't be long or short. Well, if you're short, you can stay short, but you can see how indecisive it is on the way down. So if you're short, stay short, but I'd have a safety stop somewhere that if it starts moving in this direction. Remember what these signals tell you. There isn't a real forceful selling going on. Now you've got a hammer and a doji. You're not quite in the oversold area, but it's telling you it's not a very decisive selling at this point. I'd be ready to cover a short position on any positive trading from this level. Alta, another one that doesn't have anything real dynamic to it. But if you're watching this little resistance level, I'd be more apt to buy it on strength from here, but hoping that how come this thing just is that? I'd be more apt to buy it. I wouldn't be in it right now. I'd be more apt to buy it on strength from this area. That looks like a J-hook pattern setting up. You can buy on positive trading, and so you already should know what your expectations are. That if you've got a J-hook pattern setting up, You're looking for it to come back up into the trend. If it opens positive, you don't want to see it close back below the T-line. Matter of fact, if I bought this on positive trading tomorrow, I'd immediately put a stop just below the T-line because logic says if it comes back down through there, it's not going in the direction we expected this pattern to take us. Pause. Just stay long. Nothing wrong with that one. Have your safety stop again at the T-line. OPTN, another little scoop type breakout, but more importantly, look at your Morningstar signal. Smack dab off the 50. Now you've got this doji. If it opens positive, what would the magnitude candle of this day kind of take you to? Up here to fill this gap. EZPW, bearish engulfing in the overbought area. If you happen to stay in this, because it's kind of a left-right combo, it has to open positive tomorrow. If it opens lower, you close out the position immediately. OCUL, another one you can be buying. Probably if it comes up through today's high, that would give you a definite J-hook pattern breakout. Caterpillar, another one that is right here at the breakout level. I'd be a buyer of this one on positive trading because it pretty much looks like wave 1, wave 2, going into wave 3, and what's the magnitude of wave 3? Right, the same magnitude as that one right there. Rite Aid bounced up pretty strong today. Big gap up. I would just stay long. If just for safety factor, I'd have a sell stop at today's open. Gunk, another one you can stay long now that it's broken out through this level with kind of a little Morningstar type signal. Stay long. Just I'd have a sell stop right down here. If it starts backing off, it's going to be where they came up through a resistance level. Now they're coming back to test that resistance level to see if it's going to act as support. Here, another one that's right at a breakout point. And right in there, consolidated for the last couple of days. You can still be a buyer of this one on the J-hook pattern on positive trading from this level. Look at that. LNG. Yeah, you can be buying this one. Your magnitude of return isn't going to be spectacular, but I would guess that would be your first target is the 200-day moving average. Slow, steady uptrend. Stay long. Just use the T-line as your stop. Well, for crying out loud, what's happening here? Calgon. That doesn't have a very big chart, and I'm sure Calgon's been around for a while. It's probably not your best looking chart. If you were planning on buying it, you had a lot of doji hammers, I'd be a buyer if it came back up through today's open. Nally. You stay long, they're still paying about 14%. Cressy, you stay long on this, but you did do a doji gap up. Oops, hang on for 1 second. This is the boss. I had to get an update where all the grandkids are, which bed. Cressy did a doji gap up. Put your safety stop at today's low. It shouldn't come back down through there if you're long. Oh, Ken, yeah. Except mine's antiquated, but it's probably have much better. We can do that on the same scanning night. I'll check to see which night would be the best for that. But yeah, that's really very simple. Okay, Bert, you got. All right, good. SSD, another one. I wouldn't be ready to buy it until I see more strength. Probably somewhere in there. Somewhere in there. Now, you can be buying it. Just watch to see what it does once it gets to that level. LYV, again, there's your column reversal. And you almost have kind of a parallel. Oh, pshaw. Well, Shazam. Now, you can see that there's kind of a parallel here. Now, if this opens lower tomorrow and you're long, you close it out because they're probably at least coming back here. You need to see this open positive and break out. Because if you observe the obvious, you had a bearish engulfing right up here where you had a bearish harami. That's kind of telling you something. Tail early in the trading. Yeah. First of all, well, it doesn't matter when it occurred. If you had been long and it opened and started trading lower, which direction could you see this trend going? Obviously down. If I'd been long, I would have closed out the position. Now, the other thing is how fast did it go down? It did it in like 5 minutes. So, I don't know if there was earnings or something. What is that? BEC. Didn't see anything that whacked it that bad. So, no. But what it does tell you, though, is that you have a big hammer signal. Now, if it opens positive, that's when you can be buying. The bigger the tail, the more compelling that. So, something like that. Yeah, when they took it down that fast, there must have been some sort of announcement, but I don't see anything being announced. CTRA, big fry pan bottom. Not anything dynamic, but this is the area you want to kind of watch. Notice how it started getting indecisive right there. If it comes up through that level, that's where the enthusiasm will start stepping back in. And Kara, nothing yet. Wouldn't be short, but it wouldn't be long. Just nothing there right now. Taco, if you're short, you stay short. If you were long, you would have been out yesterday or Friday because it needed to bounce up off the T-line. All right. This has been a relatively good year, obviously. So you can see what's happening. You're still in this big uptrend. And when you can see where the breakout was, that's pretty much telling you, well, not to say pretty much telling you, tells you the uptrend's in progress. We might be in a new wave, and it was much more clarified right here when they gapped down to the resistance level and then started coming back up. Art, no, remember the trading volume will be lighter, which means more than likely we'll be out having to do our last minute shopping. But remember what a candlestick signal is. It's the accumulative knowledge of everybody buying and selling during a specific time frame. Sometimes that accumulative knowledge doesn't necessarily mean that there has to be lots of volume. It's just telling you that's what the decisions were being made based upon whoever is still around. Bearish engulfing, shooting star, I'd have a safety stop maybe down here. Because if they start backing it off, good possibility they're bringing it back to the T-line. Okay, so we're going to be going into the next year, and I'm not going to let people be tentative, embarrassed, or shy about saying, I'm having a problem, because more than likely, whatever most people's problems are, other people are having the same problems, and I probably had to fight through those problems myself. So this is the whole reason we're here in a chat room, is to, if you're having difficulties, because I hear the same, what do I want to say, but maladies over and over. So it's not difficult to for me to kind of show what I do to resolve that problem. And I wish I had me around 30 years ago, because I was just kind of floundering. I was looking for a broker's broker, but even back then, like now, most people don't like technical analysis because they don't understand it, and but I wouldn't do anything without it at this point. So with that, everybody have a good evening. We will be in the chat room tomorrow. Guess the market closes early. So yes, if you're not here, have a good Christmas, and we'll see everybody, if not tomorrow, on, I guess the market's open Thursday. We'll see you then.